Welcome to Compound Insights, a podcast by CFA Society New York. I'm your host, Rob Rowan. Today we're speaking with Gabriel Thumi, who many of you have probably heard speak at a CFA Society New York event in the past, particularly our AOS ESG events. He is a CFA and he is the CEO and founder of Responsible Alpha. Now, Gabriel has an amazing reputation and a lot of track record in the climate world. He's advised more than 40 of the S&P 500 companies on the deployment of more than $3 billion in sustainable finance assets. He has also co-filed over 35 proxies that allow corporations to become more sustainable. And he has authored or co-authored over 70 investment reports on sovereign debt, energy transition, climate risk, and a whole host of other things in the range. Um, as we do on this podcast, we have to reflect your school. He has an MBA and a Master's of Science in Natural Resources and Sustainable Systems from the University of Michigan. And before working in sustainable finance, he was a junior science officer assessing ocean health in the North Atlantic and was an art history consultant. So, welcome to the podcast, Gabriel.
Thank you, Rob. And it's really nice to meet all of you today.
One of the things that we discussed in the prep for this, which I think is a great place to start, is as you are one of the original polymaths and you have art experience, science experience, and finance experience, is what is the basic scientific stuff that CFA New York members should know right now about where we're going with climate measures?
That's a great question, Rob. There are 3 or 4 categories of information that everybody needs to be aware of today. Unfortunately, the most important one is that we are at or have exceeded 7 of our 9 planetary boundaries. Wait, like what is a planetary boundary? I can only imagine.
It's the outer atmosphere, right?
Right? The planetary boundaries are what Earth scientists use to model different ecosystem services and natural capital functions around the world. We have 9 of them. Biosphere integrity, that's biodiversity collapse, climate change, novel entities, stratospheric ozone depletion, aerosol in the atmosphere, ocean acidification, land system change, water, and of course, chemical dispersion.
Right.
Air, land, and sea, and in our bodies now. And so what happens is we've exceeded 6 of those. We're at the level to exceed the 7th. And that means we've changed this planet forever. So what do we do? So from a capital markets perspective, if you're a fiduciary, or even if you're in the money markets, either way, you need to be aware of planetary boundaries and how they may begin to impact pricing, liquidity, credit risk, and calls to action by your beneficiaries.
Yeah, I think that the people on this podcast are very likely some combination of those things. Some of them do have the fiduciary obligation to do something over the assets they oversee. Some of them don't have the fiduciary obligation, but are advising their clients on these things. So please let us know what you think we should do now.
Yes, that's a great question, Rob. We are in a crisis. So of the planetary boundaries, the one that we are most familiar with, of course, is climate. We are on our path to above 2 degrees Celsius. We've seen up to 10 inches of sea level rise in the last 100 years. We've seen over 50% of the Arctic sea ice decline in mass on an annual basis versus versus 30 years ago.
Mhm.
Another way of thinking about climate change, somebody asked your colleagues, what was the price of Microsoft yesterday on NASDAQ at 12:34 p.m.?
Yeah, I don't
I
know.
don't know, right? One of your colleagues would be smart, but I got that. Snap, I know.
Yeah.
Well, that's weather. It's a single point in time.
Mhm.
When we measure climate change, when we measure chemical dispersion, when we measure the 9 planetary boundaries, we're looking at 10, 15, 20, 30-year time periods to come up with analysis that says we have transcended these 7 planetary boundaries.
Right, that is very germane to the way that CFAs think because what's in levels 1, 2, and 3, time series, time series, time series.
That's right. Time series, time series, time series. I like it. And so when we think about that, we see an increasing risk over time. But let's look at the technical definition of risk. I said risk there purposefully because risk referring can be I'm using the neutral tone. We can think about there's hope and fear. We learned about this from Daniel Kahneman and Trotsky's work in 2002 in the CFA program. It won the Nobel Prize for Economics in 2002 for this, for behavioral finance. We have hope and fear in the future. What do we choose? So for us at Responsible Alpha, we're fearless, we're tiny, we're small, we just started as a company. We're already all over the news, all over the world, because we work together with institutions where they are at. We help you solve the problems that you may think you have around sustainability, climate, and ESG, which is very different than saying, here's a cookie cutter product. So what do people need? Going back to that fiduciary, going back to that money market trader, going back to your colleagues in New York, our colleagues over the world in the CFA community, they need people who can speak their language and help them create solutions based on where they are at, because every institution is different.
Right.
And every institutional path is different. And institutions need different paths. They need different options. They need to understand where the risk may lay and where the hope and opportunity in the future may be, so they can make the wise choices. So for me, as a natural resource scientist who's also trained in finance, I need to translate that information that I see in the scientific literature and turn it into actionable, digestible words and tasks that others can use.
All right. Well, so let's dig into it then. What are these things that you need to communicate? I mean, most of the members are exceptionally well versed in communicating more complicated things about finance to their clients who might not have a background in finance. So, what should they be talking to their clients about right now?
Well, the one thing they should talk about, the very first thing, maybe not directly with their clients though, but have it in front and center here, is definitions. Think about this. Imagine two people talking for an hour, all about sustainability. They completely agree. They're met at a conference. It's a speed date. They're doing great, having so
Yeah.
much fun.
Yeah.
They never define sustainability.
Hmm.
One, after an hour, they both say goodbye. Thank you so much. LinkedIn, we're going to follow up, more coffee, and late in the future. And the first one says, on the thinks offline, that's right. For me, sustainability includes natural gas.
Hmm.
The second one, sustainability does not include natural gas. And they've had this very passionate conversation about business strategy, and they've connected, but they really haven't, because they never defined sustainability. These terms, sustainability, biodiversity, plastic, chemicals, all need to be defined when you talk to people.
Hmm.
Taking a simple word like plastic, there are about 30 different families of plastics. The production processes vary as much as one could ever imagine between one family and another. And there are over 10,000 additives that are different chemicals put into plastic itself globally.
Right. To make it stable. Yep. Heat resistance, all that stuff. Yep.
Right. And so when we talk about plastic, what are we referring to? So again, we have the very first thing we define the risk in a way that's understandable. And then the next thing is link it to us as systems or a theory of change. And that's where number two, we have to understand, where does this sit in the process? So the genius is less saying that company's bad because they produce plastic. Of course, there's going to be companies that produce plastic. It's a useful tool. It's a useful product. We all use plastic. The wise analyst says, oh, what's the supply chain for that production process? Now, I said wise, but what does the wiser analyst think? There you go. We got
Okay.
it right here, right? The wiser analyst, Rob, says, for example, LyondellBasell's revenue from sales to Unilever is about 1.2% of their total revenue.
Uh-huh.
Well, we probably know what LyondellBasell is selling to Unilever: resins, plastic.
Right.
And that's 1.1% of Unilever's cost of goods sold.
Okay.
We know what Unilever is buying.
Right.
Can we match their sustainability commitments on each side, hand in glove, like a jigsaw puzzle?
Hmm.
No, they do not match.
Hmm.
That's not a critique of either organization.
Of course, yeah, yeah.
It's the fact that analysts may think in a silo
Right.
opposed to thinking horizontally. So the wiser analyst thinks horizontally. Of course, there's wise, wiser, and
Why is
wisest.
this?
So the wisest analyst says, here's the supply chain. I can link it together. Where is the risks in the supply chain and the opportunities over time to transition that supply chain, to strengthen that supply chain so it can build the products of the future, not the products of the past. In other words, the wisest analyst isn't analyzing Microsoft today thinking it's 1989. They're looking for startups, small firms that can help transition our economy globally to an economy of hope for its for when it's then 2050 and we have transitioned to low carbon, sustainable, and equitable future. What does that transition model look like? What are the paths along the way? What are the business principles that get us there? What does success look like? That's what the wisest analyst is thinking about.
Fascinating and also quite hopeful. Started off on the on the right thing here. I guess when people are thinking about that, one of one of the features that comes along the way. There's a lot of things that come along the way after that, but that's a great place to start. When analysts are looking at the broader supply chain, due diligence can get a little tricky depending upon which issuer you're looking at, which investment you're looking at, etc. How can the wisest have surety in what they're looking at, or is that just something we have to say, take what we got and make the best of
That's a wise question. I like the question. No pun intended.
it?
It makes me think because surety exists in understanding contagion,
Hmm.
thinking of the network for greening the financial system and the key risks that they describe. Now, the network for greening the financial system, we are not members because we're not central banks or monetary authorities.
Right.
It's
Right.
parallel with the Task Force on Climate-Related Financial Disclosure, which CFA Institute can be a member, Responsible Alpha, we're a member, and your firm can also be a member, probably is.
Yep.
Now, what does that mean in practice? Let's look at a chemical park, and I'm not picking on chemical parks, don't worry.
Yeah, 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 yeah. No, I understand.
It's a very easy example to illustrate. We can imagine that.
Hmm.
Maybe 3 square miles, 40 different companies in the park, each buying and selling products back and forth from each other. They have any energy efficiency and water efficiency measures that they share. So they share energy and water efficiency.
Hmm.
And excess energy may be then distributed into the local community using district energy, which is more common in Europe, but it's used around the world.
Hmm.
Well, if one of those facilities at the asset level has a credit event, like a domino, it impacts the other
Right.
facility
Right.
because we need to understand that in some supply chains there is a much deeper sense of liquidity and in many fewer products that they themselves are liquid. So, for example, in oil and gas, there are fewer products.
Hmm.
So it's the replacement value to go from, oh, upstream, there's an issue, I can replace it from another area, another vendor, is very different than maybe in the petrochemical space, where it's a different model.
Right.
And that's also a similar model that we see in the food and agriculture space, where there isn't necessarily fungibility easily.
Right. Let me just hit on a few topics that are here specific to the U.S. a little bit because there are some things going on that you can see in the greater infrastructure world that I think are going to have an impact. So we just had a rather large, called inflation bill, but it was really about infrastructure and about green infrastructure. But it also feels like the end of the music from the federal government. Um, More of the states are moving into this now. And in this country, of course, we have 50 sovereign states, if you will, and they have about 50 different approaches to this. And then on the other hand, we have some federal legislation that is, maybe taking a step towards, a likelier approach to a carbon credit, which the states would opt into, et cetera. But how can investment advisors here look at the types of investments that are being made, either from the benefit of that federal bill or when the states get into this more directly? What are the complications we need here? And what is the due diligence obligation for investment advisors in the U.S., knowing that's the playing field?
On the one hand, some good things is in the US we have common law,
Right.
and one can write a contract. It can be executed upon,
Hmm.
a recourse.
Right.
It can be standardized contracts,
Okay.
and in some cases, even using an organization such as ISDA.
Okay.
That's a benefit. That creates liquidity, assurance of contract completion, and marketability, of which eventually there could be a market. A market could be based on that. Now, when it comes down to the rigor of the projects, on the other hand, where the complications lie is along tenor. Just like we learned in the CFA, we talk about risk and return, but then we also talk about taxes, time horizon, liquidity, legal, and unique.
Right.
Unique can use that same model to assess whatever the product is, even if it's an ecosystem service product, so it's a carbon offset, or a water mitigation bank, or biodiversity offset, or if it's a product such as, corn spot and futures, or spot and futures around a petrochemical product delivery, or something in a different product like semiconductors. So where sustainability lays, and there is sustainability lays in the unique aspect of RRTTLLU, it also lays in the legal and liquidity, the taxes, if there's a tax advantage or not, the time horizon, does the policy match the length of the contract or not? If it does not, one may exceed the other. And from that you can calculate up how it impacts risk and return and create your efficient frontier. So there are solutions for this model, for these sets of risks. But where we step out of the box as analysts is we apply the analytical tools we've gained in our careers and do not get hamstrung because it's a novel area. Just like semiconductors were a new sector in the 1980s,
Right.
ecosystem services are a new sector today. Okay, let's learn the vocabulary, let's learn the definitions, let's learn the science, let's become fluent, and let's make some good, wise decisions.
Okay. Fascinating. Now, one thing you mentioned earlier was the issues around the supply chains. And if anything is changing since COVID faster, I doubt it's anything other than supply chains, right? There's some level of onshoring, I guess, although it seems like less than perhaps is in the news. Companies are thinking about this. Undoubtedly, the EU is thinking about it writ large as we are entering into wintertime here, and a massive amount of natural gas infrastructure was built in this past year. So that's caused the supply chain to zig and zag all over the place. How do you think that's affecting the climate efforts that a lot of companies are making? I'm thinking mostly about solar panels here, but I'm sure there are others.
Yes. So for me, I would look at this if we borrow the model of the Sustainable Development Goals, which if we just need to understand, the Sustainable Development Goals have 17 goals, 169 targets, and 231 indicators.
Right.
Right. Now, the goals are vague, the targets are more specific, but the indicators, some are very specific across countries. They're like green, think of green, yellow, red. Some are yellow, but not very clear. Some are red and vague. But that model, what it provides us is a layer cake. Think of a wedding cake with 3 layers. First layer is natural capital. It's our Earth science. It's how our Earth functions. On top of that, and there's 4 sustainable development goals that sit inside that: air, water, land, and ocean. And on top of that, you have human capital. Then on top of human capital, the economic capital. Now, why does this matter? Because in climate science, and more broadly with the planetary boundaries, you know that the wet gets wetter and the dry gets drier. We have extremes that are increasingly extreme. Those extremes are impacting our supply chain.
Right.
So we have to go from a just-in-time supply chain, on the one hand, that's the previous model, to the current model, just in case,
Okay.
because the extremes are there. So if I'm a supply chain manager I need to make sure what's my not just my option B, what's my option C, D, E, and F.
Right.
If I'm an analyst, I need to make sure that the company I'm doing equity model of has they themselves have considered multiple supply chain risks. In particular, they consider the risks they haven't modeled out yet.
Mhm.
Now we come to what's happened with COVID
Yep.
from the systems perspective and the response in the solar panel industry. What is nice about the IRA Act is that it was a systemic approach and it was top down. And it provides a very strong demand signal that this is where we want to go from a hope perspective. It provides some of the tools, capital and policies, and underlying public-private partnerships for us to get there.
Yep.
Now, how each of the 50 sovereigns, as you call them,
Yeah.
wish to react or or be proactive about is up to their. I'm not a political scientist. I know nothing about that.
Right. But we know it's up to their legislatures, basically. Right.
Yeah.
So,
But it doesn't. What it does matter is that we have only one planet, and we're not going to be able to all go anywhere else.
mhm.
So that means when we look at it's 2050 and we have gone through the transition to a low carbon, sustainable, and equitable future, and we've used the competitive forces of business, which is an amazing tool to get us there. It's because we've used concepts such as radical collaboration to get there.
Yep.
We work together to get us there. If you think about this Titanic, many people died, many people lived. But I'm not interested in like who was on the Titanic and who's on the lifeboat. I'm interested in who helped get one person from the Titanic to the lifeboat.
Mhm.
That's a radical collaboration.
Yeah. Fascinating. I'll tell you, it is it's wonderful speaking with you about this because it is hard to feel positive about when you're a bit of a data hound and you see a bunch of noise that you can't get through or data that's harrowing. so, so it's either one of two things. But perhaps we should leave it there at that sense of cooperation because I'd like that to go out through the internet to people, and I'd also like to have you back because there are going to be things that we're going to need this kind of view into. So thank you, Gabriel, for being here.
Thank you very much, Rob, and thank you for our community for partnering and listening. I welcome any and all questions and comments, whatever they may be. The dialogue is rich. We are one planet and one community. Let's do it the best we can.
Yep. And for those of you who are interested in speaking to asset owners who can make a change in these events, please take a look at CFA New York's website. Our upcoming event with the Insurance Roundtable will be an interesting chance to talk to the CIOs of some of the largest insurance investment books. They certainly have a massive amount of sway here. So, members, if you're interested in doing that, please sign up for that event. It's coming up in December. Until next time, I'm Rob Rowan, and this has been Compound Insights.